Hey, good morning. All right, so I'm going over US dollar, Japanese yen. And once again, I'm going to go over some of the Fib extensions just to give you a snapshot of how it really looks as well. All right, so we're going to do a bearish impulsive move on the Fibs. All right, we're going to take this measurement to this level. In fact, let's do this. Let's go back to where I saw this move in the market. All right, so based off this move, these were going to be potentially downside targets that line up with market structure, in this particular area. This is target 1, 2, and potentially 3. All right. Now, when those targets are set, we can just create a box where targets can come to. So when it comes to the middle, something like this, so these targets typically are within range of each other, but this one is so far apart from this one. I'm not going to create a huge box that looks something like that, right? So what I do is I look at market structure area over here, and you just basically take it from the top of this fib level down to whatever's within this range, and you can stretch it over. And remember, if you don't want to stretch, you can just right click, go to settings, and you can say extend right. So you see I just extend it right over here. All right. Or you could do extend left, of course it's not going to show up. But this to just allow you just to click on it once, and it'll just extend right all the way through the screen. All right. So I don't want to do any of that. All right. So these are levels based off the fib measurement. All right. Now we can also do fib retracement levels. And the key thing is we want to see that 23% violated. And if so, we got a high probability of trying to get down to 61%. So now you can see how I can use the retracement levels as well too in conjunction with that. And so these levels somewhat line up. So we got some confluence. So we're good to go. And let's play. Let's see what's going to happen. All right, so targets 1, 2, 3 hit. So you see how these zones are hit based off the field levels, right? All right, so this was the field 61% level. That was just hit. All right. Now you see the power of using the Fibonacci extension and retracement tool and just making sure that with confluence it's lining up with areas on the chart where there's market structure of supply and demand levels. Let's just randomly go through and see if there's some other ones just like do it like a Euro USD. All right, let me take some of these indicators off for you guys. All right, so clearly you're already seeing I had this zone already up. Sorry, I just didn't stretch it all the way over. So see, all right. So you see how we still came back into this area. If you look left over here, that was what this is a supply area. It's an area where price had some major movement out of this particular consolidated area for our supply. So we can do the same thing by measuring some of these impulses as well too. Now, when we get down into an area like this, yeah, you do have to be a little careful because a lot of times it could be a bear flag or a pennant forming down here, and it's not really truly a trend reversal. So we can get up here and we can fill on these levels and we can push lower. But we still could play the same game, measure this impulse, come back down. All right, and so we haven't reached the first impulse target based off of this. So we have to be mindful that, like I said, this could just be a true supply zone. We still could push forward, or we can start to fight our way to get up to these levels. And if you look at the key levels, what you'll notice is that these are areas of where this was some key levels, like this is a supply zone, so it falls there. Now, how did I get this first target when I first came to this pair? All right, so we had a cup and handle formation. So right here we have the cup, and then you have the handle. So with the cup and handle, let's see. All right, so you see how it looks like a cup, and then you got the handle. Um, and of course, you can have two types of cup and handles. You can have one that can handle to the left, a handle to the right. It's like a cup. And some people just say, hey, that's just an inverted head and shoulders, whatever. You can call it that as well too. Um, with the cup and handle, we just measure from the base up to the neckline. Um, Up to the neckline. All right, and then you just take your neckline and you set it on top. You take your measurement, set it on top of the neckline, and here's the targets. So you see I came right to these targets as well. And your stop loss would just be below the cup. So this would be your stop loss down below here. So that's how I got these targets earlier. Now you see that, when you come into the market, when you're versatile, you start seeing various different setups, so you know how to play it as well too. This is more of a bigger cup, so this is an inverted cup. All right, we could do the same thing. Take it for the measurements to the neckline, and we could do this. You see how price comes right to the area. Of course, it went further down, but the targets were achieved and done. All right, so you guys stick with looking at certain patterns or whatever. Sometimes I don't see clear patterns like a double top bottom, bull bear flats or whatever. But I have just classic setups of supply and demand areas, and and that is still a legit strategy. All right, I'll give you an example. Look at this right. Look at this retest right here. All right, if we're just patient enough, all right, we got to push down, and then we get a wet retest. And you look left. This was what? This was supply zone now, because price what left out of supply zone. And if you don't remember we do our supply zones based off what was the last. If we're looking for bearish moves, we're looking for the last bullish candle before we seen a major drop. Okay, so like right here, this would be considered a supply, and they're all over the charts. All right, because this is the last green candle. Bam. And sometimes you need to find an origin. Okay, see this right here, and then we get this move. This would have been one as well too. But what you don't want to do is you don't want to start having your chart looking like what it's about to look like now, because I'm just marking up some zones or whatnot. You don't want this, because you're gonna have too many. All right, look at this one right here. You'll have this one, and so then see how your charts now is gonna be starting looking all cluttered up based off of, and then now you're like, I don't know which zone is what. So you definitely don't want to do that. One of the ways to avoid that is sometimes to just go on a higher time frame, and some people just start off on a 4 hour and they'll just mark out those majors on a 4 hour, is because it'll give them most of the candles. So let's see what it looked like on a 4 hour chart. So we come down to 4 hour, we can still find these concepts. All right. All right, so this one, you see how this one, so even though it's a bigger candle or whatever, but this one served as an area where this whole entire area became a supply zone. And you see how price come back in to the supply zone, and then eventually it blasted out. We just blasted back through here, but now it's serving as a retest. Okay, so it's retest. It's a particular area. Now, can this be considered a supply? Yeah. So you could have another red because this was trying to fight to be bullish, but it essentially is what is really taking price. What was the last candle? That's all you have to worry about. It's not really whether it's green or red or whatever. It's really what was the last candle before price decides just to really get out of that area. Hey, this is it right here. This is boom. This drop, bam. We got this. So this will be a key area where we will want to keep our eye on. It's a supply area, right? And we want to see if price can get back up here and retest. I can take this off. So this is an area of interest. And for what we have right now, we can just go ahead and take a nice little extension tool and we can see where it lines up. And we can see that on the top part on the target 3, it is here. But these are the areas that line up here. Now, guess what? What can we do? We can run our fib extension. Retracement. All right. And we can see where we currently are. All right. We crossed over 23%. We came back down. We went across again. We're back down. All right. Probably want to start looking for to see if we can at least get to this 61%, right? And that seems very doable. Let's see if those extension levels will line up to any of those levels are already there. And this extension falls a little bit before the 61, but we know that these could be potential good gains to get there. And if we find any entry points, at least get to the 61. That's 81 pips from where we currently are now. And if we violate this area, get back up into this area, that's 110. So it's worth looking at and seeing. Today is Thursday. Tomorrow's non-farms payroll. So we'll see. We'll see what the markets are looking like and what it's going to do to push it up there. Um, that's just something to consider when it comes to that. All right. So, all right, that's that. Y'all have a great day. Hit the like button, subscribe. It's your boy E White. I'm out.